Most people say that the secret to not being broke is to never go inside another Starbucks, but that's not true. If you really don't want to be broke again, there are 15 things I want you to do, and I'll show you. The first thing that I want you to do is grade your finances. And the way that you do that is to take a piece of paper. You can do this on a Google sheet, an Excel sheet, or whatever, but you need to see where all your money is coming from and where all of your money is going. So you're going to start by writing your income and your different income sources. This might be your job, it could be your business, it could be your investments. See all the money that came in. Then you're going to subtract every single expense. Take your credit card statement, take your debit card statement, take your bank statements, and look where all of your money went. Now, ideally, you're going to categorize this by these are my eating out, these are my groceries, this is everything else. So you're going to categorize this by the different types of expenses that you have. That way now you can see your income, you have your expenses, and then you have whatever's left. And then you can see, did you invest this money? Did you save this money? Did you put some of this money to charity? What are you doing with this money? You need to see this in order to actually be able to improve your finances, because in business, what they say is if you can't track it, you can't optimize it. Well, it works the same way with your money. If you don't know where your money is going, you have no way to actually improve what you're doing with your money. And the reason why this is so difficult is because this is almost like giving yourself a report card. Nobody liked getting their grades when you were in math class in high school. Well, now when you do this, you're going to have to take a look at what's actually happening with your money. And I can guarantee you, the first time you do this, you are going to be shocked when you see where your money is going. And immediately, I don't even have to tell you what to do. Immediately, you're going to find ways to cut expenses and have more money. Number 2 is spend less than what you make. Once you see how much money you brought in, you cannot spend more than that money, because if you don't have any money left over, you can't invest your money to build wealth. You can't save your money to protect you, and you can't give any money back because you're spending all of your money. This means now you got to start spending less money strategically. Where can you start spending less money? Well, you got to see where your money is going in the first place. Maybe you eat out less. Maybe you stop buying so much stuff. Maybe you can't afford to go on those vacations right now. Maybe you can't afford a monthly massage membership. See where your money is going, and then see where you can cut back on some of these expenses, because if you're spending more than what you bring in, well, you will never be able to build wealth. Number 3 is pay yourself first. And the first time I heard that, I thought that meant that when I pay myself first, I'm going to spend this money here first. I'm going to spend money on a nice vacation to treat myself, or I'm going to buy myself a nice car, or I'm going to buy myself this nice thing. That way I can pay myself and treat myself. But paying yourself first does not mean treating yourself first. That means building your wealth first, which means always spending money here first. Investing your money first. And the way that you do that is by creating a system where now no matter how much money you get paid, you always put aside money to invest. You always put aside money to save, and then you spend whatever's left. The biggest mistake the majority of people make when it comes to their money is they spend their money first and then they save and invest whatever's left. But if you want to become wealthy, and what wealthy people do is they invest and save their money first, and then they spend whatever's left. The simplest way that you can do that is by following something like a 75-15-10 plan, which says that for every dollar that you earn from here on out, 75 cents is the maximum that you can spend. 15 cents is the minimum that you invest. 10 cents is the minimum that you save. Now what you're doing is anytime you get paid, you're always paying yourself first, because you're always investing your money. The more money you make, the more money you invest. You're always saving your money. Now a little caveat here when it comes to saving, because when it comes to your saving, you don't want to just keep saving your money forever. You want to save your money strategically, and that means saving somewhere between 3 to 12 months worth of expenses. So figure out what your monthly expenses are, multiply that by 3, multiply that by 12, and this will give you a range for how much money you should save. Once you hit that amount of money that you want to save, then you can stop saving and reallocate this money here to your investments, because this is what's going to make you wealthy. This is what's going to protect you against an emergency. This is what allows you to live your life and enjoy your life by having the nice things. This is the money that you can spend, and of course, I want you to give back too. Give money to charity. Give your time. But I also want you to remember that the more you have, the more you can do. And this is why you want to make sure you can take care of yourself, because if you are hungry, you can't feed another hungry person. But if you can fill your cup, if you can take care of your finances, you're going to have the ability to give back and do more. So always give back. Also remember, you need to make sure you take care of yourself, that we have the ability to give back. Because most people talk about the importance of giving back, but they have nothing to give. you got to make sure you take care of yourself, that we actually have money and have wealth to give back. Now, don't get me wrong, you don't have to be a millionaire to start giving back, and you can also give back your time. I'm not saying you can't do that. What I'm saying is if you can take care of yourself, you can take more care of other people. The more you have, the more you can give. Number 4, if it's not paying you, it's not an investment. If you're walking around paying extra for the Nike, you're paying extra for the Gucci, what you got to remember is you're a walking advertisement for Nike and Gucci. Now, there's nothing wrong with that. If you like the Nike, if you like the Gucci, and you can afford it, no big deal. But if you're broke, if you're struggling with money, you don't need to be paying a premium to be wearing these brand name products to advertise their stuff, to walk around as a walking billboard when you're not getting paid to do that. Because now you're paying Nike, you're paying Gucci to advertise their products. Again, don't get me wrong, nothing wrong with having nice things. There's nothing wrong with having expensive things. There's nothing wrong with having luxury things. I want you to have all the nice things, but I want you to be able to afford it. If you are broke, if you don't have money in the bank, if you don't have an investment, if you don't have an emergency fund, you should not be walking around with Gucci on your belt or with Nike on your feet. You need to have something that can actually take care of your feet and keep your pants off, but you should not be walking around with Nike on your feet and Gucci on your belt. Number 5 is you can turn your annual income into your monthly income, which means if you're making $50,000 a year right now, guess what? You can potentially turn this into $50,000 a month. And when you hear somebody say that, you're going to think they lost their mind. Because when you're here making $50,000 a year, going to $50,000 a month is going to seem like a million miles away. It's not even going to seem possible in this lifetime. But the reality is, it is possible. Does that mean it's easy? No. And is it going to happen by doing the same thing that you're doing right now? No. But it is possible, but it's going to require you to first understand and believe that it's possible, and then work to actually achieve this. Now, what do you actually do to achieve this? The first thing you got to do is start learning about how you can earn more money. What can you do to create an income? What can you do to build a business? What can you do to create a new stream of income that can allow you to 10x how much money you're making? Where can you figure this out? If only there was a platform on the internet that allowed you to watch and learn from other successful entrepreneurs, where people could talk about what they did and you could see what they did and watch it happen in real time without you even having to pay anything. If there was only a platform on the internet. Start by watching YouTube videos, then read books, then take action, then maybe buy some classes, then take more action, then maybe buy some coaching. The more you do, the more you'll realize that making more money is possible, but you're going to have to put in more work and you have to do more learning to try new things and figure out new ways to earn more money, because sometimes all we need is a little taste of knowing that it's possible to earn more money. And once you have that taste and you have the drive and you have the desire and you have the willingness to learn, then nothing can stop you. Number 6, get rid of your car payment. The average new car payment in America right now is $717 a month. Do you know what this means? This means that if you're worried about gas prices, you can't afford this new car payment. $717 a month for a new car payment is the highest number we've ever seen. Now, of course, let me give you the normal analysis that everybody does. If instead of having a car payment, you took the $717 a month and you invested it, and let's say you could get just a 7% annual return on your money, which is below the historical average if you just invested your money into, say, the S&P 500, and you did this for, 40 years, well, instead of having a car that's worth nothing in 40 years, you would have almost $2 million. Now, you're going to be saying, but Jaspreet, I still need a car to get to and from work. What do you want me to do? Well, what you can do is take that $8,000 down payment that you put to buy this car, and instead of using that as a down payment to buy this car, take that $8,000 and use it to go out and buy a car with cash. Yeah, you're not going to get the BMW, you're not going to get the Benz, but you're going to get a nice Toyota, maybe a nice Honda. And now this car will take you from where you got to go to where you got to go without this expensive car payment, without the premium gas, without the expensive insurance. And now you don't have to take this money and give it to your car dealership or your bank every single month. You can take this money and put it to work. That way it can actually make you richer instead of just making BMW and Mercedes-Benz richer. Number 7 is make less speculative investments. When most people are in the early stages of trying to build wealth or start investing, we get attracted to this old idea of trying to get rich quick. Now, most people don't actually know it's get rich quick because we've all heard that get rich quick schemes don't work. So instead, what do? We look for the next hot meme stock. We look for the next hot cryptocurrency, and then we dump our money into these things which make money for some people, but everybody else ends up losing a big chunk of their money. And so instead of looking for the next hot stock or the next hot thing, invest your money into something a little bit less speculative that's going to make you money over the long term. And I learned this lesson the hard way too, because when I first started investing a long time ago, I started getting into this idea of day trading because people kept talking about how much money you can make day trading. And then I learned about this thing called penny stocks. Now you could day trade penny stocks and you could double your money in a day. And it was very addicting and very exciting. And so I took a whole summer when I was in college, and all I did was day trade. I was day trading primarily penny stocks. I would wake up before the bell. I would be researching the articles, researching the forums, and then see what stocks to trade. And all day long, I'd just be making trades. And by the end of the summer, I had spent hours of my life now consumed by day trading. And I don't think I made any money. I don't really think I lost that much money, but I was right around break even after a whole, I don't know how many months, and that's when I realized that I want to be an investor, not a trader. Now, my investment portfolio looks something like this. And of course, I'm not telling you what to do, I'm just telling you what I do, and I should also let you know that investing has risks. You are never guaranteed to make money when you invest. In fact, you will probably lose money at some point, so make sure you understand that before you go in, and never blindly trust a random guy on YouTube. So my investment portfolio looks like this, which is 75% of my investment portfolio are cash flow producing assets. This could be my physical real estate that pays me with cash flow. This could be my stock ETFs that pay me with dividends. And these could be actual stocks that pay me with dividends as well, non-ETF stocks. So 75% of my portfolio are cash flow producing assets. Then I have this smaller piece of my portfolio, which are things like stocks that don't pay dividends. And then I have this part, which is somewhere between 10 to 15, maybe 20% of my portfolio, depending on the day, which is my speculative investments. These are things like the startups that I invest in. These are things like my cryptocurrency investments. These things are speculative. I know that there's a high chance that this could go to zero, and there's a high chance that this could also grow very quickly. So many of these, or some of these, might go to zero. Some of them might grow big. At least that's what we hope. But it's very speculative, and I also understand that if this went to zero, I really wouldn't be affected that much. And then here I have this teeny tiny piece, about 2% of my portfolio, which is physical gold. This is what my portfolio looks like. So I have the 75%, which is paying me with cash flow, whether or not, well, I do anything, because this is cash flow producing assets. So now, this is a long-term portfolio for me, because now I'm not looking to sell my portfolio tomorrow, in 6 months, or even in 6 years. I'm looking to hold on, to accumulate, to build, and to grow over the long term. And so for me, when I invest my money, I'm not looking to invest for 6 months. And if you want to actually make money with your investments, well, you might want to consider not trading, not finding the next hot stock, but rather investing in something that has good long-term value, because that can make you way more money over the long term than just trying to trade and finding the next hot stock, because that has the most risk, which means you can also lose the most money very quickly. Number 8, when you inflate your income, don't inflate your lifestyle yet. The biggest mistake that so many people make when they get a raise, when they get a bonus, or when they get a promotion is they blow all of their money. There are so many people, actually pretty much everybody, who says that their financial problems are because they don't make enough money. And then what happens is you get a raise, you get a bonus, you get a promotion. So you make more money, and then all of a sudden, boop, your expenses shoot right up with it, because now you got to celebrate. If you get a raise, you got to get a new car. If you get a bonus, you got to go on a vacation. And this is where now, if you actually want to have more money for yourself, when you go and get a new raise, don't go and spend all of your money. And now, if you do that, you can increase your income faster than you can increase your expenses. Now you will always have more money working to make you wealthier, and every time you get a raise, you will actually become wealthier instead of just looking like you're richer. And if you want to look like you're richer, well, you want to actually become rich and wealthy first, because now you have the assets. And when you have the assets that can pay for your lifestyle, now you can buy whatever you want without having to worry about the money, because you have the investments that will pay for you. Number 9, don't make emotional financial decisions. And this can be with your investments. Panic buying or panic selling. When we hear about the next hot stock all over the news, on Reddit and everywhere, people are talking about how much money they're making. It can be very interesting and exciting, and you want to come in and buy. Maybe even margin up your investments, leverage up your investments, that way you can make even more money. And then on the flip side, when you hear about the market crashing, when you hear about a recession, when you hear about a stock crashing, now you'll want to panic and sell before everything goes down. The markets, especially the stock market, runs a lot on emotion. And the people that actually make money are the people that invest their money not on emotion. And this is where if you can take the emotion out of the equation, you will have the ability and the psychology to make way more money. But the reason why this is so difficult is because, well, the internet fuels this emotion. The media, traditional media, fuels this emotion. Because when things are good, the traditional media will keep telling you about how the world will never end, about how the money is going to be great forever, and how this stock, this investment, this thing will keep making so much money, and you have to come in now before you miss out on the opportunity. Then when things start to go down, it flips. You don't hear, oh yeah, it's having some issues. You hear the world is ending. You hear this company is going to go down to zero. You hear that everything is going to go down and you need to sell and get out while you can, which creates so much emotion. And then now on the internet, we have forums. We have people where they can talk to each other and people get emotional. And now everybody keeps talking about how the world's going to end or how you can never stop making enough money. And it's just polar extremes in money and polar extremes in emotion, which fuels people to do dumb things with their money. And this is where now, if you want to make smart spending decisions, if you want to make smart investment decisions, you got to pull the emotion out. I'm talking about your investments right now. But it's the same when you spend money. When you go to the store, instead of just buying things because everybody else on Instagram has it, buying it because you want it, or buying it because you need it, and then buying it because you can afford it. It's a completely different way of looking at money when you pull that emotion out. Number 10, stop financing things that don't pay you. Just because you can buy something doesn't mean you can afford it. If you have $100 in your bank account, that doesn't mean that you can afford to buy a $200 pair of shoes just because you can finance it. And just because you have $100 in your bank account doesn't mean that you can afford a $100 pair of shoes. Now you might be saying, but Jaspreet, what do you mean? If I have $100, why can't I buy a $100 thing because I can buy it with cash and not have to finance it? Well, now you're spending all your money to go out and buy something that isn't paying you. If you really want to be able to afford something that you don't need to survive, then you can follow my rule of 5, which is if you can't buy 5 of them, you can't afford 1 of them. With this simple rule, you will know whether or not you can afford something. Number 11, pay off your credit card before you start investing your money. Let's do some quick math. If you put your money in the stock market historically over the last century, you would be getting an average of 7 to 10% return on your money in the stock market on average. So this is stocks. Now, if you have credit card debt, let's do credit card. If you have credit card debt, you might be paying somewhere between, I don't know, 12% on the low end to let's say 25% on the high end for credit card debt. Well, these numbers are bigger than these numbers. Meaning, if you work to pay off your credit card debt, that means you will get a faster and better rate of return than if you just invest your money in the stock market. Not to mention, yes, you could potentially earn more money here, but you also have the risk of losing money here versus here, you have a guaranteed return. Because these numbers are bigger than these numbers, you should pay down your credit card debt before you go out and start investing your money, because this money, this interest is skinning you alive financially. So pay down your credit card debt and then start investing. Number 12, build a savings fund and then don't touch it unless it's an emergency. Your savings fund is there to protect you against an emergency. Some people, I know Dave Ramsey calls it an emergency fund. This is cash that you're gonna put aside to protect you against an emergency. Your kid's arm breaks, your window breaks, your car breaks down, something bad happens. Now you can tap into this savings fund. Gucci having a sale is not an emergency. Black Friday is not an emergency. This is money that you're gonna put aside for an emergency, something going wrong, maybe you lose your job. That's what this money is for. How much money? Well, like I said earlier, somewhere between 3 months and 12 months worth of expenses. Then you're gonna take this cash, put it aside, and you don't touch it unless you absolutely need it. Now you might be saying, but Jaspreet, isn't this money gonna lose value to inflation? And yes, it probably will. But this money, your savings money, is not there to make you wealthy, it's there to protect you against an emergency. Your investments are there to actually make you wealthy. Your savings are just there to protect you. And so you want to make sure you have this, because then if you run into a financial hardship, well, you have cash to fall back on. Number 13 is if you have extra junk, sell it. My sister-in-law was over at our house over the weekend, and we were hanging out in the basement, and we had these old lamps there that my grandma had. And she was saying that the lamps that we had in our basement, which were just sitting in the corner, she said that these are now worth thousands of dollars each. I said, what are you talking about? These are just some old lamps. And she said, well, they're trending on TikTok and people are spending top dollar for these lamps. Now, I wouldn't go out and sell these lamps because they were my grandma's, so I want to keep them, but you never know what's going to have value. And if you have something that doesn't have the sentimental value, that's just sitting there collecting dust, and you want to make some extra cash, well, you can turn that dust into cash by selling it. Go to Facebook Marketplace, go to Craigslist, go to eBay, go to Amazon. There are so many platforms online where you can now start selling your stuff, and you can turn that stuff that's collecting dust, that's wasting space, and turning it into some cash. Number 14, this one's going to be tough, but talk to your spouse. You and your spouse have to be on the same page when it comes to money, because if you're there, you're cutting back on your expenses, you're working to earn more money, you're working to invest your money, and then you go home and you see your spouse spending all this money on a bunch of things that you think are stupid, well, that's going to create a lot of fights, and it's going to create a lot of tension. It's going to create a lot of friction between you two in the relationship side and the financial side, and this is where you got to have that tough talk with your spouse. And now you got to sit down and figure out what are your goals together and get each other on the same page of where you're trying to go. How do you sell this to them? Well, you got to tell them the goals. Because if you say, we're going to start cutting back on this, this, and this, nobody's going to want to do that, because why would you want to cut back? But if you're cutting back a little bit, that way you can have even more in the future, that's what you have to sell. You got to become a little bit of a salesperson here. You got to sell the vision. You got to sell the lifestyle that you're going to have, but you have to work to get there together. And if he or she still doesn't believe you, tell them to watch my videos. And number 15, this one might sound like the opposite, but don't chase money. Ironically, when I stopped chasing money, I started making way more money. And I know some people say this like in a real cliche way, but I seriously did, because when I first started trying to figure out how to make money, I was doing it just to make money. I started event planning and doing party promoting when I was in college, because that's all I really knew and had access to, because I was working in the wedding industry. And I was doing it not because I liked it. I actually hated the industry, because I was promoting these big club parties, but I didn't drink. I wasn't into partying. I was doing it because I was making money. I was doing it to chase money, and I was making decent money, especially for a college kid, and it got me started, and I learned a lot of things. But once I started doing things that I actually cared about, like now I make these videos about financial education. I didn't start the Minority Mindset to make money. I was busy doing other things. I had other businesses, other things that I was running. I started Minority Mindset because I really just cared about talking about the things that I wish somebody would have told me when I was getting started on my journey. I started Minority Mindset because I was scammed in a previous business that I was running. So I was just talking about the things that I wish that I knew. That way you don't get screwed over when you start a business. That's why I started. Well, now I make way more money, even though I didn't do it to chase money. And so when you really chase that value, you chase the purpose, you chase the mission, you can do a lot more. And the reason why is because now when you're working, you don't feel like working. Now, that's very cliched, and there's a lot of untruth to that, because there's some things that you're going to do that just do feel like work. Like, there's going to be days where it's going to be a grind. There's going to be some things that you don't like doing. Like, I don't like editing videos. I don't edit videos anymore, but I never liked editing videos. So there's going to be things that you don't like doing. But the purpose and the mission will drive you to keep learning and to keep going. Because starting something, doing something of your own is difficult. And when you're doing it just for the money, well, once you get the money, you lose that mission, you lose that purpose, and you have no more reason to keep going because you made some money. But when you do it not for the money, you can get the money and keep going, because now you're doing it for something even bigger, and it allows you to, ironically, attract even more money over the long term. So figure out, what is it that you're actually passionate about? What is the value that you want to solve? What is the pain that you can work to fix? And as you work towards that, what I think you will see is you're going to see the opportunity to make even more money, because you're going to be willing to put in way more work, way more effort, and be way more obsessed because you're doing something that, well, other people don't have the same passion as you. If you want to become successful, there are 7 things that every successful person tries to avoid, and number 1 is taxes. Now, before you go out and stop paying taxes, let me clarify what I mean here, because as an attorney who is not your attorney, there are certain things that the IRS tax code allows you to do with your money